We've got Phil LeBeau on the rally for travel stocks and Mark Mahany on the latest Musk Twitter drama. We'll kick it off with the broad market. Dow's up 530 points. We've surged just in the last few moments up to the highs. The S&P up 2.1%. It's a healthy rally. All sectors are higher on the day. Bonds are rallying. The dollar selling off, and Bitcoin and crypto is also getting a big boost. Lindsey, we've had two strategists on the show today. We had Jason Trennert of Strategist. We had Tony Dwyer of Canaccord, both pretty skeptical on the rally. One worried about the economy and the fallout from higher rates, and Jason's worried about the Fed having to do even more and saying the market is too excited over rate cuts. Where do you stand?
Yeah, I mean, look, I think this potentially could be an overreaction to what was a pretty good CPI report. We definitely have a lot of data to get through before we get to the actual decision by the Fed in September. But for today, we're rallying, and I think it's really because inflation has been such an overhang for investors and for the market. And I think what investors are thinking today is maybe the peak really has been put in the past. If you look at core CPI, while it stayed hot at 5.9%, stayed steady, it has come down from about 6.5% in March of this year. So we might have peak inflation in, but the question is, where does inflation go from here? How fast does it move lower from here? We're not probably going to end the year at 2% inflation, so I can understand the worries of both of those strategists that you just mentioned.
Let's hit Twitter and Tesla, which are both moving higher today. This after Elon Musk sold almost $7 billion worth of Tesla shares. Musk saying in a tweet the funds could be used to finance a potential Twitter deal if he loses his legal battle with the company. Musk now has sold about $2 billion in Tesla stock since November. Joining us for more is Mark Mahany, Evercore ISI head of internet research. Does this make you think that he's closer to having to buy this company?
I think it's hard not to reach that conclusion. I'm no legal expert, but with all the checks we've done on it, it would seem to appear that Twitter is a pretty strong legal position here. This is all going to come to a head in the middle of October. I think the date's October 19th. You've got a judge, the Chancellor McCormick, who's a pretty clear track record on this, seems to be a no BS judge, and the 5-day hearings are going to determine this case, and specific performance seems like a reasonable, odds-on outcome. But we'll see. And I think that's exactly how the market's interpreting it today. That just became more probable. Maybe they'll still negotiate something between now and then, but it does seem more likely that this deal is going to happen.
Well, the stock is still $10 below the deal price. So why aren't you recommending it if you think the deal is going to happen?
Because this is a deal situation, and these are so hard to predict. And so we're out of fundamentals land, and I try to keep myself to fundamentals land. So I also want to be careful on the downside here, too. I mean, we didn't think he was going to walk away from the deal in the first place. And those who were short the stock could have made a lot of money as part of that if they covered at this point. I want to think about the downside, though. In that situation, we never know what's going to happen. If the deal were to fall apart, where does Twitter go? That's what the market's done, is kind of put the stock kind of in the middle of the upside and the downside case. The upside is $54. The downside, if you look at comps like Pins and Snap, you could probably see yourself to a $30 stock. So, you're a little bit above, making money. There's a little less downside here on the upside case than there is on the downside case. So that tells you the market's thinking this is going to happen, but it's not a distinct possibility. And this has been more volatile of a deal than any I've seen. So I want to be careful.